Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about the recent earnings release by HITID, but specifically what this means for investors and what this could imply is coming next and why this is so important for anyone who is invested in this company. You've probably seen loads of videos on the HITID results already, but this one is different and you don't want to miss it. If you're new to the channel and you like investing related content, then hit that subscribe button. The YouTube algorithm doesn't like my unpredictable upload schedule, and increasingly people are not seeing my videos when they get uploaded. If you want to make sure you don't miss them, hit the bell next to the subscribe button and hopefully you should be notified when a new video is uploaded. The channel now has its own Patreon and private Discord group. Check out the link in the description below if you're interested in that. The numbers are limited, so it won't be open forever. If you like the video, please smash the like button. It's so helpful in pushing the channel to a wider audience. As always, I'm not a financial advisor. This video is purely for educational and entertainment purposes only, but let's get straight into it. So firstly, let's quickly discuss the great set of results. Now, you don't need me to read these to you. I'm sure you've seen them already, and I don't want to waste your time with that. In short, however, the results have been great. It's generated strong revenue growth at around 118%, strong gross profit growth, and good cost control management. Despite the huge increases in revenue growth, the SG&A expenses have decreased, and this is a great sign. This clearly shows that management have had a strong focus on managing the cost base, and that's great. Now, it is possible that part of this is attributable to the health crisis, so we do need to dig a little more into this. The company also demonstrated good EBITDA growth, with the first fiscal year of positive EBITDA. Again, this is great news. In general, it's a good overall EBITDA margin for a retail business, albeit partly diluted by the negative EBITDA that the company generated in Q1 of 2020. So, what's coming next, and what does this mean for us as investors? Firstly, more acquisitions are coming. Raj Grover, the CEO, commented on how more deals can be expected, and obviously the Meta Growth deal has just been completed, and the Smoke Cartel deal may be done by the end of Q1 of this year. This acquisition-led growth strategy is great, and Raj is proving it out. You buy a competitor, eliminate costs for the duplicated roles and functions, and generate good cost synergies. Typically, you're buying smaller companies, and these companies can be acquired for lower valuations too. This in turn generates value creation through multiple arbitrage. Let's walk through an example here using very rough figures. Let's say, for example, HITID is trading at 20 times the forward year EBITDA. Let's then say it can acquire company A, which is a smaller company, for 15 times forward year EBITDA. This means that alone through that acquisition, when the EBITDA from that company that's acquired is included within the overall business, it's re-rated at HITID's multiple and immediately creates that value. Then add in the synergies, and these are cost savings from duplicated functions across the business, and then you have even more value creation. Personally, I think it's great to see this strategy being executed and it enables the company to quickly scale. Clearly, funding is an ongoing challenge for the company, but as it grows, it can start to access traditional debt markets which are cheaper. They don't dilute the shareholders in the same way and are much less restrictive on the business in other ways. Now, next up, the important thing to talk about here is what I believe the potential and very realistic potential of a further Analyst price target upgrade here. Now, ATB updated their price target on February 22nd to $1.20. Then, following the results on Tuesday this week, the target then got revised upwards to $1.40. Personally, I wouldn't be surprised if we saw this price target upgraded further. For fiscal year 21, ATB are forecasting sales of $174 million and EBITDA of $18 million. Now, in the earnings report, based on guidance for the Q1 21 from Raj Grover, the CEO, we are expecting between 37 and 38 million of revenues in Q1. That represents a growth of 175% on the Q1 period for 2020. Now, in the business, historically, Q1 accounts for around 17% of the full year revenues. Now, taking this assumption, we can imply that if that trend continues, FY21 will generate total sales of around $223 million. That's assuming the midpoint in that range. Then, by taking the 10% EBITDA margin, which analysts are forecasting for FY21 and FY22, and which it delivered for the fiscal year 20, this implies an EBITDA potential for 2021 of $22.3 million. Now clearly, those figures are a lot higher than the figures that ATB have in their latest analyst report. Now taking a step back, the 223 million sales projection would mean that ATB's forecast revenue had been exceeded by over 28%. So personally, I do think there's real potential here for another revision to the price targets, as ultimately those forecasts could be smashed by as early as next month when we know how Q1 has performed. Now looking at this differently, assuming the 17% of revenues that the business has historically generated in Q1 and applying that to ATB's forecast, that would imply a Q1 figure of around $29.6 million, just shy of $30 million, a figure which would be 20% less than the guidance we had from Raj. So on this basis, I do think ATB's numbers are a little bit underbaked, and I wouldn't be surprised if we did see a revision to these and a revision to their price target. As always, that's very good news to see. Now, we do know that the Q1 earnings for 2021 will be released by the company in around a month's time. Now, I want to see good results here and the positive momentum sustained. It'd be great if we could see EBITDA in the region of around $3.25 million to $3.75 million. That would be really good. So in short, I'm really happy with the results. The company's performed really well. It's delivering on its strategy, and that's great to see. I think current market conditions aside, and I do have videos coming soon to address this in detail and really explain to everyone why it's happening, what's happening and what we can expect. However, putting that aside, it's so important to see the company performing well, delivering on its strategy, so that in 3 to 4 years' time, we have a very different business, a clear market leader, many multiples of the size it currently is now. That is only ever going to be good news for the valuation. Anyway, thank you so much for watching. I hope you enjoyed the video. If you did, please smash the like button. If you're new to the channel and you like investing related content, then make sure you subscribe. Also, check out the Patreon page if you want to see more content and also exclusive content too. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting to hear everyone's opinions and thoughts, so please get involved. Thank you so much for watching, and I'll see you in another video.